Hello, good morning. You're watching Market Cafe on ET Now. Monday, and yes, what an historic one that has come in after a gap of 20 years of beating New Zealand in ICC Cricket World Cup tournament. Now, not only did India make a historic win, but also created histories as Shubman Gill becomes the fastest batter in the world cricket to score 2,000 runs in ODI cricket. But Kohli has to wait for his 49th century a little longer.
Well, yes, absolutely, Vinny. What a match it was. Kohli, as usual, at his chasing best. Really.
I was worried at one point of time with the fork coming in, and I was like, okay, now what's going to happen? Is it going to be the 21st year or 21st time? But I was like, okay, let's just wait for that now.
Yeah, and his 49th would have been epic. He actually went for a 6, and I don't think he was able to pull that off, and which is why got stuck on 95, but nonetheless, what an outstanding match. India on top of the table now, so very comfortable now.
India on top of the table, but yes, do you think the global markets are supporting a cheer or festive cheer, or is that going to be subdued today?
Yeah, absolutely. So you're looking at global cues which are largely subdued, Vinny. You're looking at US markets which closed lower in trade on Friday, and some amount of pressure coming in largely because macros are not supportive. You're looking at both US, the Dow, the Dow, the S&P 500 as well as the Nasdaq, all three in decline on Friday. You're seeing around 0.9% lower on the Dow. The S&P 500 was down around 1.3% and Nasdaq down 1.5%. All three indices were also losers for the week. So what you're largely seeing is negative cues coming through. Let me also take you through the numbers for the week. In fact, you're looking at the S&P, which was lower around 2.5% for the week. You're looking at the Nasdaq, which fell 3+%, and the Dow fell 1.6%. In fact, regional banks as well as Amex kept the pressure on some of those indices. We saw the likes of an Amex fall over 5%. Let's also take a look at where the dollar index really stands. 106 is where the dollar index is currently at, Vinny. So what we're seeing across the board is bond yields very close to that 5% mark, the 10-year US bond yield. US markets under pressure. I'm going to flip it over to Europe as well. Nothing different there. You're seeing the UK 30-year yield rise to the highest level since 1998. So you're seeing a 25-year high on the UK 10-year. And across the European markets, you're seeing declines, 1.6% lower on the DAX. The FTSE also down 1+%, and the Stock 600 was down 1.3% in trade. So red was the color. In fact, on Friday, let's hope for a slightly more positive start. At least that's what the GIFT Nifty is indicating early on today, Vinny.
You're seeing the global markets, but also, let's just get a check on what crude is doing as well, right? Crude, as of now, when I'm looking at crude at around $91.5 per barrel mark, slight bit of a decline coming in this morning in trade as well, and especially, what is coming in after Hamas actually has released 2 US hostages. So that worry that is there, the concerns around the geopolitical tension that continues to be there, maybe hoping to de-escalate a bit is something that we are getting and hoping for. And crude as of now a bit subdued in trade, down 0.7% in trade. That's the Brent crude oil prices at a $91.45 per barrel mark. Let me also look at what WTI crude oil is doing. That is at $89 per barrel mark as well, down 0.4% approximately this morning as well. So let's keep an eye out on those levels over there, what they actually end up doing. Now, given the turmoil currently as well, we're seeing a push coming in for the safe haven gold, and closer to the key levels that one watches out for is that around $2,000 per ounce mark as well. As of now, slight bit subdued in trade is what the gold is trading early morning in trade. Given up some of those gains that we were seeing overnight in the last couple of trading sessions as well, and gold currently at $1,977 per ounce mark. So keep an eye out on that one as well. What is important to mark also just in terms of the commodity front is the Singapore GRMs. They are trading at $1.45 per barrel, which is the lowest levels that we've seen for Singapore GRM since the 1st of May. So yes, because of that, we're keeping an eye out on some of the stocks in the Indian markets as well. But that is how we are looking at overall the cues coming in, even on the commodities front, with subdued in trade, hoping for some de-escalation coming in the geopolitical tensions as well, Harsh.
Absolutely, Vinny. Let's quickly also have a look at what are the events to watch out for through the week. Indian markets will be closed, of course, tomorrow on account of Dussehra. We are celebrating that in our office today, Vinny. But apart from that, we are also expected to see US GDP, core PCE, price index numbers, as well as initial jobless claims, which will continue to trickle through the week. We're also expecting on the macro front the Eurozone, S&P, Global Services PMI and Global Manufacturing PMI disclosures, as well as the ECB key rate decision coming in on the 26th of October. Will the ECB continue to raise will be the question. In terms of earnings, we're in the thick of it, not only domestically but even globally. Tech earnings will be in focus in the US. We have the likes of Microsoft, Meta, Intel, Amazon, all tech stocks disclosing their earnings. We also have a Standard Chartered disclosing earnings on the 26th. So eyes out on that one. On the domestic front as well, currently things driven very stock specific. We are right in the middle of earnings. You have the likes of a Tech Mahindra and Axis Bank coming out with numbers. We also have the likes of an Asian Paints, Dr. Reddy's Labs, Maruti Suzuki, SBI Life, all of which will disclose numbers on the 27th of October. In other corporate action as well, we have the likes of a NetWeb, a Signature Global lock-in opens for 3% of the shares on the 26th of October, so that one will be in focus as well. M&M Financial to consider a fundraise as well. So all of that and more through the rest of the week. Stay tuned.
Absolutely. A very exciting week, despite it being a holiday tomorrow, we have a lot to watch out for in terms of numbers that especially going to be coming in as well. A lot of nifty companies there. But let's move on to some update coming in on the global front and related to the geopolitical tensions. Some recent updates from Israel and Hamas war. Now, the second convoy of 8 trucks enters Gaza via the Egyptian side of the Rafah border crossing, heading towards the Gaza Strip. A total of around 17 trucks carrying medical as well as food supplies had been inspected by the UN's Palestinian Refuge Agency. Meanwhile, the death toll has risen to 28 following the latest Israel airstrike in the southern Gaza city of Rafah, and the Palestinian describes the latest airstrike as the heaviest bombardment since October 7th. Hamas attack also, remember, since October 7th, over 1,400 Israelis and more than 4,500 Palestinians have been killed in the Israel-Hamas war. Times Network's Pradeep continues to report us from the war zone. Let's go across to Pradeep to get more update on that. Pradeep.
Right now we are in one of the forward locations in Gaza. You can see the new trenches are being dug right now. The machinery is at work and further mobilization of tank is taking place. Though ground assault is yet to be conducted, but yes, all preparations are being made to encircle Gaza area, because right now the priority is that movement of people from Gaza area towards the safer region. That's one of the reasons that the final assault is yet to start. But all I can show you right now is that with the help of the machine, JCB machine, they are digging trenches so that there can be artillery guns can be placed. And with the help of these artillery guns, they want to target all those areas where actually Hamas terrorists are said to be hiding. Today also we have seen that we pinpointed and precision attacks were conducted by Israeli forces. They were not only able to target some of those areas where the Hezbollah terrorists had been hiding, but also where the Hamas commander had been hiding. Many of their command and control centers have also been decimated. Let me show you. Look at this tank here. Here is a tank. This is already, you can see the guns are placed at a position where from they can target Hamas areas. Now look at those other areas also. Let me show you the number of tanks. Earlier, this was a clear field, but now during the last 24 hours after Biden's visit, you can see more trenches are being dug. The preparations are being made so that they can counter Hamas, they can decimate Hamas, they can demolish Hamas, because already Israel have made up their mind that they will not allow them to live. Now let me show you, more tanks are being taken to different places. So with the help of these vehicles, they're taking these tanks to different areas so that they are placed at points from where they can target enemy location. Now again, let me show you. This is the tank where now you can see the Israeli flag also there, and the men are there with all that ammunition. They're waiting for the green signal so that they can target the enemy location. And right now we are in one of the forward posts, and right now see the work is going on. The more tanks are to be placed. JCB machines are working. Let me show you again. Look at the far off there also. Then there also they've got the artillery gun also. Anytime they're going to open mouths of their guns, because whenever they get coordinates about the presence of the terrorists on the other side, because that area is called Gaza. Whenever they get information, accordingly, they open mouth of their guns so that they can target those locations. They're able to decimate. During the last 4 or 5 days, we have seen that more than 9 top commanders of Hamas have been eliminated. One of them was Murad Ali Murad. He was the one who was looking after the aerial operation. He was the same person who had helped Hamas terrorists with the help of paragliders come out to this side of the border and carry out attack. Then there was Bilal Kedra. Bilal Kedra was the one who is said to be responsible for the kibbutz massacre. He was the one who had planned how to carry out kibbutz massacre, how to target innocent unarmed civilians. Let me show you behind this area. Again, let me show you. Look at this area. How the attack movement had been there. They are placed those guns and looking, and all those. See, the senior officer is there looking after the operation, and by evening, more and more tanks will be placed in this area so that they can take on enemy with precision.
Right, let's switch over from that to some US macros now. The US budget cap soared to $1.7 trillion this year, which is a jump of 23% as revenue fell and outlays for Social Security, Medicare, and record high interest costs on the federal debt actually rose. Meanwhile, the Treasury Department said the deficit was the largest since a COVID-fueled $2.78 trillion gap in 2021.
And a week before the FOMC meet, Federal Reserve Bank of Cleveland President Mester said that rates will likely stay elevated for some time. He added that they must guard the economy and policy against complacency if the inflation does not return to the 2% target. She also believes that one more rate hike is warranted in the current cycle.
Well, one of the biggest monitorables this week will be big tech earnings on Wall Street. Investors are closely eyeing numbers from Apple, Meta, Alphabet as well as Amazon. These tech companies are expected to show an average 34% year-over-year jump in Q3 earnings. Do remember that most of these companies last year were tightening their belts as they were either slowing their hiring or laying off staff.
And South Korea's battery maker Samsung SDI has announced that it will supply Hyundai Motor with electric vehicle batteries for 7 years starting from 2026. The battery maker already supplies to General Motors, BMW, Stellantis, among the others. Remember that this is the first supply deal between Samsung SDI as well as Hyundai Motors.
Right, and in other news, highly polarized elections in Argentina will determine whether South America's second largest economy will continue with a center-left administration or elect one of the right-leaning leaders who both promise profound changes to a country plagued by triple-digit inflation and rising poverty. Meanwhile, Venezuela also commenced elections yesterday in a bid to end the decade-long crisis-ridden presidency of Nicolas Maduro.
And absolutely, festive season is here in full swing and celebrations continue across the country as throngs of people across the streets to share their devotion and partake in festivities as the countdown for Dussehra is there. Dussehra is tomorrow and today is the 9th day of Navratri. And ahead of that, Harsh, I actually managed to speak to Group Shaman, their dealers in terms of Volkswagen, Triumph, Honda as well. And in terms of how the demand trend is actually shaping up this festival season for the automakers, are we seeing it in full swing? That's what I caught up with him. Let's go across and watch the snippet of the conversation there.
August this year with the Onam festival in the south and until Diwali. So it's broadly a 3-month period that we are looking at across the country. For Onam in south, there was a 23% growth in sales. So we are also entering the festive season, our festive season, with great anticipation and enthusiasm. So far so good. September there was a 20% growth year on year for the industry. And we are hoping that this period will also be great for all of us. And we are all stocked up and ready. I think what's really helped are the supplies. This year the supplies have been very strong and great. We had those semiconductor chip issues in the past. So those have been overcome. Supplies have been very strong and stable. And so we have a good inventory to cater to the demands of our customers.
So, supply issues have gone, good inventory is there, it's all festivity around. We are expecting good growth as well. Let's talk about near term, right? Dussehra. Everyone wants their car to be delivered during Dussehra. They book it before. How many deliveries are planned for during this Dussehra time? Is it like there's a sharp increase this time?
So yes, the Dussehra is, I think, a much awaited festive period for everybody to buy their cars. So this Navratra season and Dussehra is normally the largest for all of us, especially in Mumbai also. So we are also approaching it with, like I said, with a lot of anticipation and eagerness. We have a lot of bookings, especially with the new Hyundai Elevate here. There are massive bookings. Of course, we won't be able to deliver all of them during this Dussehra because there is a waiting period. Having said that, I think the days of the 12-month, 15-month, 2-year waiting periods which
that is not there at least.
Is at least not there. I think the supplies are healthy and good. So we are talking of a more reasonable and acceptable waiting period of maybe 3 to 6 months broadly.
But let's just talk about pre-COVID levels. Was it similar to this trend, or are we seeing a higher trend now after COVID, given that everyone is spending a bit more in terms of the luxury side as well? So is that a trend that we are seeing coming in now?
So definitely, I think post-COVID, I think COVID taught all of us a lot of things, right? So it is one life that we are all living, and all of us are a lot more willing to spend money. So the automobile sales have grown pre-COVID levels. So we've witnessed a strong 14% growth over pre-pandemic levels. So this recovery has been very robust. In fact, April to September this year not only grew 6% over last year, but it also was an all-time high record for sales as well. So it's all auguring well, I think.
Right, interesting conversations. Dussehra good for business. But let's slip into a very short break on that one, Vinny. More, of course, on the other side, so stay tuned.
Welcome back, and you're watching Market Cafe on ET. Now, a lot that happened over the weekend, and obviously Kotak Bank came out with its numbers. But what was the big story was that in a surprise move, Kotak Bank appoints international banker to be the new MD and CEO of the bank. That's Ashok Vaswani, is the former CEO of Barclays UK. Now, Ankur Mishra is here with more details on that. Ankur?
A definite surprise thrown by Kotak Mahindra Bank, because Kotak Mahindra Bank had recommended the name of Ashok Vaswani as MD and CEO as among the two candidates which were sent to Reserve Bank of India. Now, Reserve Bank of India has given the approval for appointment of MD and CEO upon his name, and this approval is there till 1st of January 2024, meaning his joining needs to be there by that time, and the approval is there for 3 years. Now, who is Ashok Vaswani? He was, of course, related with the Barclays UK, where he has worked for quite a number of years. Apart from that, he was also associated with Citigroup, where he has had various positions. And currently, he is president of Pragya Technologies, which is in US Israel AI fintech, where he is currently working. When we asked the question to the management when he is likely to join, we were told that it will take at least 1 to 2 months for completing all the formalities. But all in all, the surprise has been thrown by Kotak Mahindra, because there were several considerations on who will be the next successor of Uday Kotak upon his resignation. And finally, it is not an internal candidate, it is an external candidate, Ashok Vaswani.
Also, more on that, let's get some more context. Listening to what the management had to say to ET now with regard to, of course, earnings as well as the appointment.
We have made our application to the RBI. for the chairman. The current chairman's term expires at the end of this calendar year. So we would wait for the RBI to approve the post of the chairman.
Regarding your unsecured portfolio, where the growth has been robust, I can see even in the credit card segment, the growth is over 50%. Is there any extended provisioning which you are thinking? What is your thinking there? You want to continue growing like this?
Again, if you look at it, we have grown when I talk about unsecured retail, I'm including credit cards, personal loans, the unsecured at the retail level, the retail microfinance. So all of that put together as a pot, we will today be at about 11% of our overall advances, which a quarter ago was 10.7. And yes, we've talked about the fact that we are comfortable growing this and taking it to about early to mid-teens. So we are on track there, and we are quite okay with that. As regards provisioning, if I look at my overall unsecured book, the provisioning there is in excess of 85%. So we're pretty much covered there.
Right. The other one that made big headlines was both large banks, Kotak as well as ICICI, declared their quarterly updates, numbers rather than updates. What we saw with regard to Kotak as well as ICICI is that margins really took a shrink. We saw Kotak's margins shrink by around 35 basis points quarter on quarter. ICICI also saw a shrink of 25 basis points. In Kotak's numbers, though, we had around a 15 odd basis point of one-off which has come through. So technically speaking, there is still some amount of margin going forward that came out of the commentary, suggesting that there will be some amount of cushion going forward as well in terms of margins, and that margins may just sustain above that 5.2% number, which it has done at least in Q2. That's what indicators are suggesting, but largely in line set from both banks. ICICI, though, slight bit of beat on the back of lower provisioning that came in. We saw your net interest income coming in roughly 24% higher, operating profit largely in line with what we were penciling in. Provisions came in at half of what we were penciling in. So we were expecting a provisions number of 1300 crore. It came in at 580 crore, which is why profit after tax shot up a wee bit versus our expectations. It came in at 10,260 crore versus the 9,500 crore number that we were really penciling in. So on the back of that, we saw ICICI Bank do relatively better in terms of its numbers. Even on the growth front, ICICI Bank grew 18% both sides of the balance sheet, which is quite impressive. 5% growth on both sides. A solid set overall from ICICI. Kotak largely in line, nothing that disappointed at all, even in the Kotak Mahindra Bank numbers, Vinny. Right. Let's also quickly go to the management of ICICI to listen into what they had to say.
Both from a regulator and analyst and research reports have indicated a slightly higher increasing risk in unsecured portfolio at level, especially on the personal loan. However, the risk build-up is happening in segments in low ticket size, which is 50,000 and below, where affordability and the repayment capacity might be constrained. As far as the bank is concerned, we do not have any meaningful presence in this segment. Another indicator of risk build-up is the number of live unsecured loans which is being serviced by borrowers, where in the bank we take necessary steps by restricting origination in such customers. As far as we are concerned, we will continue to monitor these portfolios and give loans only to customers which fall within our risk thresholds. And that is a strategy we have been articulating for a long period of time.
Okay, let's move on and also listen into what brokerages are saying this morning for Kotak as well as for ICICI Bank. Now, when you look at the Jefferies, they're maintaining a hold given a target price of 1,940 rupees per share. CLSA for Kotak Mahindra Bank is maintaining an outperform rating and given a target price of 2,050 rupees per share. Furthermore, what is also coming in is that Jefferies now has actually downgraded Kotak to a hold from a previous buy. They've cut the target price slightly. So that is what we're keeping an eye out on in terms of Kotak's brokerage as well, because a slight bit of a downgrade coming in there, 1,940, previous target price of 2,400 rupees per share. What they are saying is that seems like, there's a slight bit of a miss coming in terms of Q2 ahead of the NIMs deflated by one-off events, and they will watch out for signs of smooth succession going forward as well. Valuation premium to peers can see a bit of a narrowing as well. Now, in terms of Kotak Mahindra Bank, CLSA is saying that they're maintaining an outperform rating, but they too have cut their target price to 2,050 rupees per share. And they're saying the appointment of external candidate came in as a surprise. That's what we spoke about before as well. Loan growth in terms of the numbers was on track. Drivers remain the same for Kotak Mahindra Bank. For ICICI Bank, Jefferies has come out with a view, beg your pardon, that they're maintaining a buy rating. They've hiked the target price for ICICI Bank to by 10 rupees, just a small hike, but yes, 1,250 from previous 1,240. They believe the NII is a tad bit ahead of estimates, and despite the NIM compression in ICICI Bank, they believe the corporate NPL upgrades keep the credit cost low as well. Management is also saying that they're comfortable about the quality of the retail book. They see lower NIMs and higher credit costs coming in for the company. Bank could still deliver 18% return on equity in FY25, and ICICI Bank is among the top picks for Jefferies in the private banking space as well as of now. But that's how brokerage is also looking at Kotak as well as ICICI Bank. It will be interesting to see how they actually shape up in trade today and what happens to these banks. But on that note, viewers, we're going to slip into a very short break. Don't go anywhere. After the break, we'll be talking about which are the stocks to watch out for as well.
Right, welcome back. Thanks for staying with us. Let's quickly move on. Let's look at, what are the levels to really watch out for on the index. We have Ansh with us with the FNO snapshot.
Right, so as you can see on the chart as well, let's get the chart on the screen. Nifty failed to sustain about 19,650 level and have been trading below this from last two sessions, which is a negative sign actually. Now let's see what happened in FNO segment. Long unwinding was seen in Nifty futures with open interest declining by over 3%. This indicates that bulls have lost their control over the market and traders are actually chipping out their long positions in the market. Whereas on option front, we saw very active put buying at 19,400 strike, indicating traders expecting Nifty to go below this level within this week. Nifty is right now around 19,540, so this is like 140 points below from current levels. Whereas on call side, strong call writing was seen at 19,600, indicating some resistance around here. Now let's shift our focus to what FIS did. In index futures, they covered 7,000 long contracts, showing bulls are taking their bets off the table. On option front, we are seeing all positions getting added. Call long, call shorts, put long, put shorts. So this means that call and put traders both are anticipating limited movement in the market. We can say that looking at the option chain, we can expect some range of around 19,300, 350 to 19,600, 650. So in a nutshell, FNO data shows bulls getting skeptical and Nifty looks a bit range bound situation with downward bias till it stays below 19,650 on closing basis.
Okay, that's how the FNO side is looking for us. But Ansh, you're also here with us to tell us which are the important stocks one should be keeping an eye out on this morning. GIFT Nifty indicating a slight bit of a positive start, but are there exciting stocks one should watch out for today?
Sure. So let's take a look at some significant financial reporting of the stocks actually. Just Dial reported strong financials, year-on-year revenue growth of 27.3% to reach 261 crore. EBITDA sees a substantial increase of over 200%, reaching 50 crore. Net profit jumped by 37 crore to 37% to 72 crore. IDBI Bank has released mixed results. Net interest income saw a significant year-on-year growth of 53%, but declined by 23% on quarter-on-quarter basis. Operating profit dropped by 6% on year-on-year basis and 31% on quarter-on-quarter basis. Net profit stands at 1,323 crore, marking a 60% increase on year-on-year basis. Balkrishna Industries showed a diverse performance. The company reported a decline in revenue by 15%. However, consolidated EBITDA shows a positive trend with around 24-25% increase, and net profit dips by 9.2% to 347 crore. Poonawalla FinCorp delivered impressive results with year-on-year revenue increase of 62%. EBITDA shows remarkable growth, rising by 73%. Company reported PAT of 860 crore, which includes an exceptional gain of 816 crore from the sale of investments. Lastly, Credit Access Grameen revenue jumped by 53%, and PAT shows impressive growth, rising by around 98-99%. Net interest income experienced substantial growth of around 50% as well. So keep an eye on the stocks.
Okay, surely a whole list of stocks to watch out for and trade. Thank you so much for that, Ansh. But let's move on and talk about Reliance, especially. Obviously, the numbers will be coming out later on this week. But what we're talking about today is Reliance Consumer Products. Now, we have a note that is coming from MK in terms of a channel check for the FMCG side. They're saying that there's limited traction for Reliance's offerings, and furthermore, they're saying that select outlets have been sponsored by the company, which initially did not stock products owing to the higher credit days. Also, they what has happened is, but now they have reduced the exposure due to the muted offtake as well. A bigger delta is being seen with the scale down of Geomart's B2B business services, as well as the Reliance Consumer has not yet been able to make a mark in the market, a market specifically something like Surat or a Baroda that you see coming in as well. Now, on July 23rd, they saw that the company launched its offerings in UP, where the focus is yet again on the product push with trade partners, but the brand pull is absent in Reliance Consumer offerings, and that's something that one should watch out for as well in terms of limited traction that is coming in for these Reliance offerings. So let's keep an eye out on the FMCG side of Reliance as well, Harsh.
Right, Reliance in focus on the back of that. But with that, we're completely out of time on this edition of the show. From Vinny, myself, everyone who puts the show together, thanks so much for watching. One piece of good news, the Gift Nifty seems to be in, rather bad news, Gift Nifty seems to be
Giving up those gains.
Giving up those early gains from that around roughly 0.5%. We're down to around 0.3%. At least that's what early indicators are reflecting. But the market will take all the action forward.